Welcome to Brand Insider. In this video, we are going to talk about history of Goldman Sachs. Marcus Goldman, a German immigrant, arrived in New York City with his family in 1869 and set up shop in a one-room basement office adjacent to a coal chute at 30 Pine Street in Lower Manhattan. During a period when bank credit was scarce and expensive, Goldman provided a viable option to local businessmen. He would buy their promissory notes and then sell them to New York's commercial banks, establishing himself as a pioneer in the commercial paper industry. Marcus Goldman's business became a partnership with the addition of his son-in-law, Samuel Sachs, in 1882, and his son, Henry Goldman, in 1885, under the name Goldman, Sachs & Co. Goldman Sachs was a market leader in commercial paper sales by the time it entered the New York Stock Exchange in 1896. Goldman Sachs established links with financial firms in various European capitals in 1897, offering foreign exchange, letters of credit, gold shipments, and arbitrage among other services. As clients demanded higher sums of long-term capital in the early 1900s, the firm began to build an investment banking division. Goldman Sachs broke new ground in making equity and debt instruments more appealing to investors in two of the firm's earliest public transactions: initial stock offerings for General Cigar and Sears Roebuck, both in 1906. The firm adopted a unique approach to valuing issues by developing the concept of valuing issues based on a company's earning power and goodwill rather than just its physical assets. This method provided a huge new supply of capital, especially for merchants and other businesses with limited real assets. The price-to-earnings ratio would go on to become an industry standard, cementing Goldman Sachs' reputation as a financial pioneer. F. W. Woolworth, 1912, Merck, 1919, and General Foods were among the early clients of the firm's underwriting division, 1922. Goldman Sachs employed over 500 workers to assist its clients from the late 1950s through the early 1960s. The company, which is now a market leader in private finance, was working to establish a similar position in municipal financing. It also established one of Wall Street's earliest mergers and acquisitions departments, which set another industry norm. The centenary year of Goldman Sachs was also marked by grief due to the death of Sidney Weinberg. Gus Levy took over as senior partner after him. The firm's leadership in the sales and financing of big commercial buildings began with the establishment of the real estate department in 1969. Goldman Sachs' clients' operations and financial demands became more worldwide as global capital markets developed and integrated. The company overcame this obstacle by growing its operations to new levels. In 1970, it opened its first foreign office in London, followed in 1974 by operations in Tokyo and Zurich. Goldman Sachs soon rose to prominence in underwriting and trading across a wide range of government and corporate debt markets after forming the fixed income department in 1972. Goldman Sachs continues to expand its global influence as it increased the scope of its business. Goldman Sachs began trading equities in Tokyo in 1984, allowing the firm to provide round-the-clock coverage of key capital markets. Soon after, the company was chosen as one of the first 6 non-Japanese companies to join the Tokyo Stock Exchange in 1985. Goldman Sachs was the first multinational securities firm to be granted permission to create a banking unit in Japan in 1991. At the same time, the company continued to develop its activities throughout Europe as Western European countries drew closer to a single market. After New York, the London office grew to over 1,000 workers, making it the firm's largest business and a prominent player in international acquisitions and equity problems. The firm's prominent position in the global financial services market was solidified during the 1980s and 1990s, which were years of difficulty and growth. These were also years of leadership transition. John Whitehead left his position as co-senior partner at the end of 1984 and went on to become US President Ronald Reagan's Deputy Secretary of State. John Weinberg became the firm's sole senior partner and chairman of the management committee before stepping down to become senior chairman 6 years later. With Weinberg's departure, former co-chief operating officers Robert Rubin and Stephen Friedman became co-senior partners and co-chairman of the management committee. When Robert Rubin left Wall Street to serve as special assistant to US President Bill Clinton on economic matters and director of the newly founded National Economic Council, and then as Secretary of the Treasury in 1995, Stephen Friedman became the firm's lone senior partner. The partners chose to take Goldman Sachs public in a historic vote in 1998. Goldman Sachs now has the capital and organizational flexibility it needs to provide world-class service to its clients well into the 21st century, thanks to this decision, which came after much internal deliberation. In January 1999, Hank Paulson was appointed as the company's sole chairman and CEO. The firm's stock began trading on the New York Stock Exchange under the ticker GS on May 4, 1999. Goldman Sachs increased its attention on and investment in technology in 2014, creating cutting-edge platforms such as Marquee to boost trading, data security, big data management, and the ability to assess a wide range of risks. Marcus by Goldman Sachs was launched in 2016, to assist consumers in better managing their debt by providing fixed-rate, no-fee personal loans. Marcus was upgraded in 2017 to include a customer online deposit platform. Marcus showed Goldman Sachs' capacity to remain agile and grab new opportunities as the firm's first substantial move into the general market. Following this new strategic focus on the mainstream consumer market, Goldman Sachs announced another initiative in 2019, a partnership with Apple to launch Apple Card, in which Goldman Sachs assisted in the creation of a new credit card experience centered on the customer, with simplicity, transparency, and privacy at the core of its product development philosophy. Lloyd Blankfein announced his retirement in 2018, stepping down as CEO in September and chairman in December of the same year. Blankfein was succeeded in both jobs by David Solomon, who had previously served as president and chief operating officer. Solomon began his tenure as CEO by focusing on extending the firm's product offering, increasing diversity, and positioning the firm to build on its 150-year history. In his first year, the firm unveiled Launch with GS, a $500 million commitment to firms started and led by women, Black, Latinx, and other underrepresented entrepreneurs in the capital ecosystem. The Sustainable Finance Group was founded in 2019 to help customers accelerate innovation and seize new opportunities by delivering full sustainability expertise across financing, advising, risk management, and asset management. The firm's sustainability activities included a $750 billion objective for climate transition and equitable growth finance by 2030, reaffirming a long-standing commitment to these efforts. As part of the company's first-ever Investor Day in 2020, Solomon laid out his strategic vision for the company. He highlighted a range of growth strategies before an audience of shareholders, financial analysts, regulators, and the media, including measures to expand market-leading positions in existing businesses while building out new franchises in areas such as transaction banking. He also outlined the firm's mission statement and key values, promising increased transparency and accountability to the company's stakeholders. As of this writing, the world is still dealing with the COVID-19 pandemic, which is putting enormous strain on all aspects of society and the most basic of human needs. Goldman Sachs has put in place business continuity plans to protect its employees while assisting clients in navigating a highly dynamic and challenging business and market environment. As the crisis unfolds, the firm will continue to adapt its response, constantly supporting its staff, clients, and communities. Since its founding in 1869, Goldman Sachs has altered nearly beyond recognition on one level. What began as a one-person operation in Lower Manhattan has grown into one of the world's most powerful financial services firms, with employees from a wide range of backgrounds and skills preparing the firm to carry out its worldwide mission. However, the firm's basic values of customer service, excellence, integrity, and partnership continue to carry the spirit of Marcus Goldman's family business. These ideals, together with the firm's collaboration culture, continue to set Goldman Sachs apart and are the foundation of its success. So that's it for today. What do you think of our video? Let us know your thoughts in the comments below. If you enjoyed this video and would like to hear more from us, please subscribe to our channel and turn on notifications before you go. Thank you so much for watching.